Hi crypto kings and queens, welcome to my channel. What we're gonna go through today is how to make $100 per day. Now obviously you need to use risk management always and forever, but this is where I will go through how you are using Fibonacci together with the MACD. I really love these two combining together, so just stay and look at the video. And remember, I'm no financial advisor. You need to look up everything yourself first, but just let's get into it because I already know that you want to listen to what I have to say. Well, hello. So of course we need to have a platform to trade the market on, right? So I am using Bitflex, and this is the one that I'm gonna talk about. If you've never used Bitflex before, then I do definitely recommend you to look at the video that I created for you as a tutorial, where I just break down from the beginning to the end on how you're using the platform, when you are depositing your funds, when you are using how to place the orders, limit, market conditional, how to use leverage combined with the amount of money that you're trading. But let's say that you want to trade $100, then you can just write down $100 that you want to trade from your account, and then you choose open, long, or short. So now if you don't have an account on Bitflex, what you can do is that you scroll down to the link in the description down below my video. You find Bitflex right here. When you are signing up here, you don't need a KYC, and when you are depositing 100 to trade, you will at this time until the 4th of August 2023 be able to win yourself an Apple Watch Series 8. So make sure to do this, really cool. And you also have it somewhere here in the corner as always. Now let's get into the strategy. The most fun part start now. So the first thing that you need to do is that you go into indicators and you type in moving average. You see this one right here. I have it as a favorite, but you just type in as you see, you put it on the charts. And when we are using MACD, what is so good with this one is that it's actually showing us the trend. So when the market is reversing the trend, you can see at the top and on the bottom, this is what we're looking for. And this is where we want to sell the market, and this is where we want to buy the market. So the most important thing is that you see these two line crosses, which means that the trend will reverse, because what the MACD is showing us is when the trend is reversing, and that is what we want to do. And we obviously want to trade with the trend. So the overall, this is how we're using the MACD. And now let's add into how we're using this together with the Fibonacci. You guys know that I love Fibonacci, and it's for a reason, because the Fibonacci is the key to everything. It's basically the key to the existence of ourselves and everything around us. Then definitely this is something that is very important when it comes to the charts. Now I have a special Fibonacci that I am using, so you can obviously go to the trading view and use that one, but the one that I am using the 50 and the 61.8% as a target, and I'm using minus 0.23, minus 0.75, and minus 1.2 as targets. But you can obviously use the previous low and the previous high, and I'll show you how to do this. If you want to be able to have this Fibonacci, then what you can do is obviously be part of my academy, the Natoshi Academy, and this is where I give everyone the settings that I have for my Fibonacci. But just remember, it is the 50 and the 61.8% that we're using as the entry points. So we're looking first of all on the 4-hourly chart, because we want to see the overall trend, and you can do this together with MACD because it's obviously showing us what trend we are in. And what we're doing with the Fibonacci is basically also seeing when the trend in a pullback is done and the market is supposed to go to the direction that we're expecting. In this case, we're looking in a uptrend. So the first thing that you need to do is obviously just zoom out. You can go to the daily also if you want to, but I'm going to look at the 4-hourly. So the first thing that we're going to do is that we're going to take the lowest point here at 16,330 and just take it up to the high at 25,257. Now you can see right here how the market came down to this level Fibonacci, the 50 and the 61.8%, and you can also see on the MACD how the market did cross right here. So this is actually a really good entry point for us to go into. Now we don't want to look at the 4-hourly, we want to go down to the lower time frames. So the Fibonacci is showing us where the market is about to come down to, and we can break it down to the 2-hourly, because we are obviously waiting for the market to come down to the fib for us to be able to take a trade, because this is basically how the strategy is working. And when you see the market starting to reverse here, you can also see how we are crossing. So this is a perfect level where we can go and enter the trade. Another thing that we also can do is that we're using the Fibonacci one more time just to identify that this is actually going to happen. So what we're doing is that you can see the market tested the 61.8%, and then you just take another fib from the last low to the high, and you can see how the market dropped down to the 61.8%, and the 50% gave you the retest. Market took all of my 3 targets. So the very good thing about this is that you can confirming we are crossing here. Market is giving you a high above the Fibonacci, creating the retest. You see the continuation up. So we're going to use this tool on the left for a long position, and what I always do is that I either use a buy or sell limit order when it comes to the fib, because I think that is I just think that it's the best way to use the fib, because it can happen so fast. And you see how the market right here is giving you a very strong bearish candlestick, and this can confuse us because the market would, looking at this, it looks like the market is going to continue down. So this is the reason why I have usually a limit order, so I don't need to go in and just look at the candlestick. It's going to confuse you a little bit. So buy or sell limit order either on the 50 or 61.8%, and what you're doing is that you're always using the stop loss slightly below the first low that you're using the fib against. Just use it a little bit down below, and you obviously need to choose what percentage that you want to have as a stop loss. But I would say you don't have to have it too far away, because when the market has done the retest and you see the second touch, this is where the market usually have the momentum up, right? Remember, now if you want to use my Fibonacci, then you need to be part of my academy, but you can always look at the left and see where the previous high was, and this is exactly combined with my take profit 3. Here you can see the risk to reward is extremely good. Let us just take this tool here. So from the entry point down to the stop loss, that is 3.26%, and the take profit is up at 12%, 12.10%. So this is fantastic. So remember, use the 1561.8% as a target. You take the Fibonacci. You are obviously using the higher time frames fib first of all now, because you see the market reversing the trend, and then you can also add another Fibonacci inside of the bigger Fibonacci, right? And because this is where we do expect the market to reverse back up. I have a buy limit order in this case, and I take my take profit at the previous high, because the market in the uptrend will break above the previous high. So we're looking at a short position now. If you are unsure on what trend you're in, you can take a trend line to just connect the dots. You can see how the market from here didn't have the power to break above the previous high, which means you can see the connection with the lower highs and with the lower highs. And when you see the market retesting the trend line once again, and you see the market starting to pull back down, what you do is that you're taking in a downtrend the fib from the last lower high connected with the lower low. And we're just going to zoom out now on the MACD. You can see the MACD the market pulls back up to my fib. Market also crosses exactly where we do expect the market to reverse the trend. You can see how the market did break above the fib 61.8% a little bit, but remember that we're having our stop loss above the high where we took the Fibonacci from the first time. So we're just gonna add this short position now. So whether you have the 61.8% as a target or the 50, you are choosing yourself. Obviously, when you're using the 61.8%, you will have a tighter stop loss. So we're using the stop loss slightly above the previous high, and you can see that we have a 3.64% in stop loss. You obviously need to choose this yourself, but with risk management it's gonna be okay. Now, either you're using the Fibonacci that I have, which you have to be on my academy for you to be able to get access to, but remember that we're also looking at the left, and we can also use the MACD. When we see the market dropping down, you can see how we're crossing, so we are entering the trade right here. Market drops down, and down here you can see how the MACD once again is crossing. So if you are a little bit unsure if the market is going to reverse the trend here, because you can see how we drop down to the support, which we can have our take profit from, and if we are just zooming, taking it down a little bit more, and we're taking it down to the previous support, that is a 6% 6.53%. So it's still more than you are losing, which we obviously always want. And if you are going back in time, you got some more previous support levels. You can see that this was only a pullback that we did have in the downtrend, which you have to have that in mind. The market will not always take your trades right away. If you're using my fib, you can either take it to take profit 2 or take profit 3. Zooming out, you can see how perfectly the market dropped down to my take profit levels, and this is also combined with a previous consolidation level. And focusing on MACD, you can also see, from the entry, we saw the cross, market drop down, you saw another cross. Take yourself out of the position if you are a little bit unsure. You can see how the market then crossed once again, and you could have taken yourself out of that position. And this is down here. As I said, this is like combined with a previous support and resistance zone, which we can also have our take profits from. So when we're using MACD combining with the Fibonacci, I think it's amazing because both of them are showing the trends, and when the market is reversing, Fibonacci is giving you the target where the market is supposed to reverse from, and the MACD is confirming that this is actually happening. If you see the market break above the 61.8% a little bit, that is totally fine because this is usually what is happening. But you can see how perfectly the stop loss is not getting taken, because remember, the previous high usually doesn't break because the market has already created the high. The lower high is always below the previous lower high. Looking at the 30-minute chart, remember that you need to know what direction the market is going to. In this case, you can see how the market was in a heavily downtrend. The market then pulled back to the upside. So you don't actually know if the market is going to continue to drop or continue to go up from here. So what you're going to do is that you see right here on the MACD how we did cross. So what you're doing is that you're taking the Fibonacci, because you can see this is where the market is crossing. You take the fib from the last low to the high, and perfectly how the market dropped down to the 50 and the 61.8%. You saw the retest, market take profit 1, 2, 3 got hits. So we're just gonna take the long position right now, and either if you want to have it from the 50 or 61.8%. I don't think this one actually hit the 61.8%, but let's say that we want to have it from the 50. We are adding our stop loss. Always remember below the previous low. This is a 2.28% move for a stop loss, and you can see that take profit 1 connecting it with the previous high is a 2.97. It's not that good, but it's 1-to-1 risk to reward, which is also good. And you can also go back in time and use the previous high, and you can see connecting with my fib, this is exactly where the market pulled back up to 6.63. So you are always more in profit, and this is, as I said, what we want to happen. So the Fibonacci, remember, it is giving us where the market is supposed to reverse from. In this case, you can see how the MACD confirmed before we used the Fibonacci the reverse of the trend, and then we saw the small pullback. And you can also see right here, obviously, how the market did cross one more time, exactly where the market did reverse the trend, and we're using our take profit, connecting it with the to the left as always. So guys, I really hope that you did enjoy this tutorial on how you're using the MACD combining with the Fibonacci. Now you obviously need to understand the trends, because this is obviously what both Fibonacci and MACD is helping you out with. Remember to use the 50 and 61.8% as the entry point. You use your stop loss below either the last low or the high, but depending if you're in a short or long position, and you always look at the left where the previous support and resistance zones are for you take profit. And you always want to be more in profit than in stop loss, obviously. And you are using the tutorial for Bitflex on how to calculate everything, and you can do this on every time frame as long as you understand what time frame that you are looking at. Please backtest this and use this for yourself, and come back to this video and comment below what you thought about it, or just comment below if this helped you to see the market in a simpler way. If you want to have more of these and we can connect more indicators with the Fibonacci, because Fibonacci is the best one, we can add more indicators, of course, with the MACD, other technical tools, but these ones is really good. So I definitely recommend you to do this. Until we see each other next time, I love you guys. Have a great day. Mwah. Toodles.